Earnings coming up very shortly for Robinhood. We've beaten on earnings. Now Robinhood is profitable for the first time. I have just bought another load of shares. I've just sold some shares of the S&P 500 overreaction, and I've just bought some more shares of Robinhood. Fantastic. Very, very happy tonight I am. So I've just bought some more, and this is great news. Robinhood have beaten earnings for the first time in its history, is now profitable, and I've just bought more. I'll see you back in a few minutes' time. Good luck, everybody. Okay, welcome to the earnings, folks. We got earnings in just a few minutes' time, and I can report for the first time in Robinhood's history, it is now profitable, and it's a good beat. I've just bought more. That's an overreaction. The RSI has gone way into the oversold, and I sold 2 shares of the S&P because the markets are starting to trim off, and I bought some more Robinhood on this overreaction. I'm already up 48% on them. I've just increased my average slightly because we've now got a beat on Robinhood. The first time Robinhood is profitable. Very, very nice indeed. I'm very, very happy with that. So we shall see. This is a similar story that happened to Amazon. Went down like 20%, and I managed to buy some shares of Amazon when that happened. I am happy with this. I'll see you back in a few minutes' time for the Robinhood earnings. Very, very good indeed. I'm happy with the beat. I knew they would beat. We could have good news coming tonight. It's oversold, overreaction as always. See you back in a few minutes. Virgin Galactic is also up in the after hours, 0.25%. I'm making money on Virgin Galactic as well now. Very nice indeed. Good evening for me. Happy with this. Love the fact that Robinhood has beaten on earnings and allowed everyone to get in at a better price. This is good news as far as I'm concerned. It's a beat. Robinhood doing well. I'm happy to buy some more. See you in a few minutes. If you've just tuned in, consider subscribing to our channel. We are at 9,916 subscribers. We're just a short way away now from 10,000 subscribers. Why that is so important is because I love to do fundraisers. I've done many, many fundraisers on my channel, raised lots of money for charity. But once we get to 10,000, I can do fundraisers without the charges from YouTube. Please consider subscribing to our channel, and hopefully you will, and we'll get to 10,000 subscribers. This week it's going to happen. We're on a target for 10 days. I think we're going to do it. We could even do it tonight if everybody here who's not subscribed before does subscribe to us. I will update you in a few minutes with my subscribe account, but right now it's 9,916. See you back in a minute. Great news tonight. Robinhood beats on earnings. The first time it's profitable. Overreaction as the markets always do. I jumped on it and I bought another load of shares at this price. This is good, and I can trade those out tonight and take a profit on those and trim my position back and put the money back in the S&P when it drops, which I no doubt will do over the next few weeks. We've topped out on the S&P this year, I believe. So I just sold a couple of shares of the S&P, bought some more Robinhood. And when this bounces back, I can just trim those off the top and I'll be very, very happy. A massive overreaction from Robinhood beating on earnings. First time in its history they've beaten on, first time in history they're profitable. Very, very good news tonight. I'm very, very pleased, happy with the team at Robinhood. See you back in a minute. Okay, guys, welcome to the earnings. What a perfect start to the earnings. And you know the old saying, the rich get richer, the poor get poorer. This just keeps happening over and over and over again. Since the beginning of time, the same thing, rinse and repeat, happens. Let me break down exactly, for those of you who are not familiar with what has just happened. Robinhood, for the very first time in its history, has become profitable. Fantastic. Great news. It's beaten earnings. Despite everything, it's beaten earnings, and it's now a profitable company for the first time. We've got earnings in 19 minutes, by the way. We're just waiting for the call to begin. So everybody dumps it. Not you, not I, the whales. Probably Cathy Wood just dumped probably millions and millions of shares. Robinhood themselves probably just dumped millions and millions of shares right on the announcement. What happened? The stock price went down. Everybody panicked. A few retail investors like us were, oh, what's going on? What's going on? Started to get FOMO and miss out and start dumping their shares. Remember, you buy when it goes down and you sell when it goes up. Those that just dumped it can move the market. We can't move the market. They moved it, they dumped it, they've made loads of money, they dropped it, and they're buying it back. So I just bought it back. Don't think like a poor person and sell on the way down. Sell on the way up. Buy on the way down if you know what you're buying, right? Basically what happened is the whales dumped it, everyone got fearful, started selling off, contributing to that, so you've just lost money, and then you get FOMO and you start thinking, oh, maybe I should buy it, and then you start buying it on the way up. And then the whales go, oh, I think we'll dump it again then. I mean, how many more times can we slap you around the face? This is why we're getting richer and you're getting poorer. Tonight was a perfect plan. All right, I've owned the stock for a number of months. I'm up 48%. I hoped they would beat on earnings. We predicted they would beat on earnings. We've been saying they're going to beat on earnings for the longest time. They said on the last earnings they would beat on earnings. This is why we report on the earnings and why we listen to the earnings. It was all expected to beat on earnings. And the stock rallied and rallied and rallied. And just as the announcement broke that they beat on earnings, the whales dumped it. And down it went. So I hope you all picked up at the bottom. I did. Now, even though I've just paid more for it and my average has gone up, That doesn't matter. My average is always going to go up over time. I'm not going to be able to buy Robinhood in 20 years for $8 anymore. Of course not. It's going to be $100, $200. I don't know. But at the end of the day, when a stock beats on earnings and it does what you expect it to do, then you get an opportunity to buy some more, because we are now affirmed that the market, that the company is profitable. It doesn't matter what the stock price does, because tomorrow it might sell off again. Doesn't matter. What I'm going to do is, in a few minutes' time, if we go back green again, the shares I've just bought, I'm going to sell. Because I sell when it goes up and I buy when it goes down. I'm going to sell and trim back to my original position. So what I anticipate happening is I'm up 48% I was before. I'm now likely to be up 60, 70% in the coming months, because the company is now profitable. Rates are going to stay high, so margin income is going to stay high. Uninvested cash is going to stay high, and we are in a bull market, so more people are going to want to invest. Robinhood are going to continue making more profits, which is all good for me, the shareholder, good for you. So my 48% is going to be back up to 60, 70%. The shares I've just bought now, because I want balance and I want to be able to buy something else, I'm going to sell those shares probably at a 10, 15, 20% profit over maybe the next few minutes, if we do get a rally. If not, I'll hold those just for a little while. Now, if we don't get much tonight, if it just goes up maybe 10% from where I just bought it, then I might sell those, 10% profit, quick, easy scalp, but I'll still hold my main position. Anyway, this is really great. I'm very, very happy with this. This couldn't have gone better. What's important is not the stock price. What's important is Robinhood has beaten on earnings. Very, very good. Very, very happy. Let's read some of the comments that I've been getting while we've been on air. We got 15 minutes to go. Let me start at the top. Hood beat. My gosh, what's going on? It has continued to drop. Storm and Norman. Yes. Did you buy at the bottom? Hi, Martin. Storm and Norman. How are you? Switzer, I have faith Hood will rebound. I bought more at 11.44. Congratulations. That's exactly what you're supposed to do if it sells off on a good earnings. Hi, Martin. Henrik, good afternoon, good evening, wherever you are. In Denmark, of course. Hood are profitable for the first time. I'm buying more. Told you I'm buying more, and I did buy more. Kathy Wood snorts way too much. It's flipping down 8% now. Well, because she dumped it. Of course she did. I'm sure we could find that out tomorrow, and it presents an opportunity. Why wouldn't she? She's probably up 200% on it. Makes sense, right? Good. Hood luck indeed. My CFD position is locked in, so nothing I can do until the morning. Storm in Norman, don't worry. They beat on earnings. Give it a week, give it a month. Who cares? They beat on earnings. Robinhood are profitable for the first time. Very, very good. Everything is going down. Everything is going down. Not everything is going down. Jim Cramer index. I'm getting about 6% down, quote now. Getting about 6% down. What happened? What happened is what always happens. The whales dumped it because they sold it at the top and they're buying it back down lower because they can do that. They beat on earnings. I didn't sell any. I'm not a whale. I haven't got enough money to move the market. I would have done. If I'd have had billions of shares and I could have dumped it at the top and bought it back lower and moved the market, I would have done. But I haven't got billions of shares. But what I did do is just add some more. The moment it went down, I trimmed off the top from the S&P 500. I've made 17% profit. It's my source of funds, and I bought Robinhood on the way down, and I bought at the bottom. I can share with you my position. Let me give it to you. Where is it? What did I buy? Very, very good night. I just bought we are now at 12.05. I just bought at, let me have a look. I just bought at 11.59, 50 shares to add. So I'm very happy with that now. So now where am I? I've got, I'm up I've made $566 on my brokerage position profit, and on my Roth IRA, I've made $867 profit. So very, very happy with that. And we're going to be back up within a week or so. We might get some more whale movements in a minute, but that suits me down to the ground. 10 minutes to go before earnings. Earnings out. Yes, earnings out. We've beaten. We are going to see $20 today. We very well could. We very well could. The total user count has gone down. Q2, the user count has gone down, but we've made profits. That's what's important. And we need to find out the exact numbers, which we'll look at in a minute. Down 9.89% today. Hi all. I just made a big sell at work to load more shares. Good luck on earnings. Trying to warn people, said Sensei. Stack cash. That's what we're doing. Market crash, recession coming, says Sensei. If there's a recession, then cash will be pointless as well. Remember Greece. Banks locked everyone's accounts up. Yeah. What do you mean, Ollie? I want cash so I can buy these stocks and crypto when they drop 50%. Yes, indeed. I just bought on the way down. I'll sell in a minute and take a profit. Hello, everyone. I don't gamble at poker. I play poker. I like that. Felix Lopez, he's smiling. Bitcoin is the only safe haven. I wouldn't quite say that. Goodness, my average is 15,000. For me, it probably is at 15,000. Goodness, too much excitement for me. Hope my 45 CFD long on Robinhood isn't completely gone in the morning. Goodness, says Stormy Norman. I was up $75. I was about to buy. I was about to become a member, and now I'm down. How are you down? Why would you not just hold the position you had and then buy on the drop? I don't understand. Ed Spitzer, what's going on with you? What's going on? Low liquidity. Let's see the waiting CEO to speak. Yes, let's go up, Hood. Perfect opportunity tonight. I'm very, very happy. I'm up 48%, plus I bought the dip. Now how the hell is it even going down? What a crazy day. No, it's not. It makes perfect sense that it's gone down. We got a good beat. Okay, the whales have made a fortune. I've made 48% on Robinhood. You dump it at the top and you buy it back again because it's good news for Robinhood. It's good news. So you take the profit, you drive the market down, and you rinse and repeat. The rich get richer, the poor get poorer. That's exactly what happens. All you got to do is sell at the top and then start buying on the bottom. That's what I've done, and I'm very excited about it. Let's go, Hood. Did Martin buy at the low? Yes, of course I bloody did. Of course I did, Stormy Norman. Of course I did. You know I would. Right. Look, I bought at 11.59. Was it 11.59? Beg your pardon. What was it? I bought 50 shares at 11.59. Yeah. So many non-members. Join the group, guys. Yes, we've got a lot of guests in tonight. We will go to members only in a couple of seconds, so we can focus on all the members. Of course, we will do that in a few moments' time. Ed Spitzer, when I get money from this Hood trade, love it, Ed. I put in $2,000. Fantastic. I'm now up 2.5 on one account and 3, 4, 5, 6. I've got $6,000 in in Robinhood. Very, very happy. Oh man, good luck. It's looking good. It's looking very, very good. Got a long evening ahead of us. It's 21:35 here in England. Stormy Norman, Sensei Crypto. I am stockpiling cash for the pending doom. Buy low. Sell high. Volatile stock, though. Hopefully it will fly. What's yours price prediction for today? Well, it's very possible. I'm not making this prediction, but we could go to $20 tonight. We could. Because we've beaten on earnings. If they announce anything like I think they're going to about the UK and the credit card, we are going to be very excited. We've got 7 minutes to go before the earnings begins. Waiting to see at least the green, shaking the tree. Sold my space for more Hood. Congratulations. I will recover people. It will recover people just panic selling. It's not panic selling, Liam. The market doesn't drop like that because people panic. The market drops like that because the whales are up hundreds of percent. The people like Kathy Wood bought it for pennies. They're up massive. They sold it. The market drops. and they buy it again and do it all over again because the company have just become profitable. The company are now more desirable. Remember, you buy the company, not the stock price. If you're up hundreds of percent, which you would be if you're Kathy Wood, you've just sold, you drop the market and you start buying it again. Makes perfect sense. I didn't sell mine. I don't, I'm not a whale, right? I'm a little fish running around, but I did buy some more. Hell, Robinhood made money on their earnings call through volatility, always earning money. Yes, it will rise during and after the call. CEO has to talk still. Yes, we've not had the earnings call yet. Event in 18 minutes. Yes, in 6 minutes now. Ace 100%. How important will be the guidance on the call? Everything will be in what they say, of course. Will this turn around and move way into the green? It could well do that. Can buy when the market's closed. Can you buy when the market's closed? Yes. I can trade 24 hours a day from Sunday 7 o'clock to Friday 7 o'clock. 24 hours a day on SPY, 24 hours a day on Tesla and many stocks. I can't trade 24 hours a day on Robinhood, but I can trade for another 3 hours from now on Robinhood, with Robinhood, on Robinhood stock, I mean. Yes. So yes, always. PayPal down. I'm definitely buying. Good luck on PayPal. Robinhood stock slides after monthly active users miss estimates. Not worried about that. I'm worried about, we don't need millions of users. What we need is good users. All right. The big money is starting to come into Robinhood now. Hey, can you see Aurora? Can you see Aurora? I have no idea what that means. The colorblind collector, Aurora, 14% up. No, I can't. Oh, I see. It's a stock. I can't look at it for you now. I have to focus on the members. I'm not taking any more risk. LOL. My whole portfolio is in the epitome of risk at the moment, but doing well. Hello, Martyn. It's been a while. Charles Benting. How are you, Charles? Lovely to see you here. We're just a few away now from 10,000 subscribers. We're actually at now, let me just look at it, 9,921 subscribers. If everyone could tap the subscribe button, if we get to 10,000 subscribers, we're able to do our fundraisers without any fees to our charities at all. Very excited I can do fundraisers without fees for my charity. So please do tap the like button and subscribe to the channel, especially because if we hit 10,000 we can celebrate and do more good work for our charities. Very exciting. Hello from India, Path Kantaria. Welcome to you. Lovely to have you here. Thank you very much indeed. 3 minutes to go before the earnings. Holding 3,000 shares. What about PayPal? That's not really one of my positions, I have to be honest. All right, okay, let's get Robinhood ready to go. The audio's coming through. Here we go. And we're just seconds away. We got 3 minutes to go. 3 minutes before the earnings begins. Very, very good indeed. And it's exciting. I'm excited. We've got members now in 37 countries. At the end of the earnings, we will speak to everybody in their languages, Indian, Hindi, whatever language you are, let me know and I will speak to you in your language. We've got 2 minutes to go before the earnings begins. We are waiting. We've got the music coming through, the audio from Robinhood. It's a beat. I'm happy. And we're just a few seconds to go. Now then, if you would help us out, we've got 70 watching and 22 likes. Please smash the like button if you like my content. We aim to be the most honest, real, live channel on YouTube TV. We go live up to 10 hours a day. We go out in 14 languages. We have members in 37 countries. And I'm here to help everyone, support everyone, answer everyone's questions. Please do tap the like button if you like the video and you want YouTube to share to show you more of my content. If you don't like the content, please tap the down like. I don't mind you tapping the down like at all. That means YouTube will not show you my content and we'll get an even more engaged audience. All right? So please do that. That's how many people are watching right now. You can see 69. Just tap the like button. We've got 26 likes. You'll see it move. We've got just a few seconds to go now before the earnings begins. Let's see if we can get up to 40 likes. There we go. Don't just sit there and do nothing. Make sure that you do something. Make sure that you do something. That way, you won't see my content anymore if you don't want it, and those that do will be more directed. So everybody wins by you getting involved. All right, let's go back over to the earnings. Here we are, and let's listen in now. We've got 1 minute to go. 1 minute to go. Thank you, Kinrong, for subscribing to my channel. We will go members only mode very, very shortly so we can focus on all of our members so we can answer everyone's questions. Robinhood now about to begin. 45 seconds away. We are just now playing the audio, so let me just mute it so it doesn't come through there. And let me bring it back in again. Okay, we've got the audio. We're listening in to Robinhood's earnings. We're just 30 seconds away. If you could, just tap the subscribe button. We're trying to get to 10,000 subscribers, which will be a very exciting night. Martyn, you have sent the wrong link to become a member. And no, I haven't. This is the link to become a member. You need a browser, depending on your device. Go to Google, go to Chrome, Safari, whatever. There is the link to become a member. That is the link to become a member. Here we go. We're about to start earnings. Any second now. We have 190 members in 37 countries. These are all our countries. Here we go. No, they teased us.
Good day, and thank you for standing by. Welcome to Robinhood's second quarter 2023 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 11 on your telephone. You will then hear an automated message advising your hand is raised. To withdraw your question, please press star 11 again. Please be advised that today's conference is being recorded. I would now like to hand the conference over to your speaker today, Chris Cagle, Head of Investor Relations. Please go ahead.
Thank you, Gigi, and thank you to everyone for joining Robinhood's Q2 earnings call. With us today are CEO and co-founder Vlad Tenev and CFO Jason Warnick. Before getting started, I want to remind you that today's call will contain forward-looking statements. Actual results could differ materially from our expectations, and we
apologize for his audio.
Unless legally required.
Hopefully, it will repair itself soon.
That could cause differences, including regulatory developments that we continue to monitor, are described in the press release we issued today, the earnings presentation on our investor relations website at investors.robinhood.com, our Form 10-Q filed May 10th, 2023, and in our other SEC filings. Today's discussion will also include non-GAAP financial measures. Reconciliations to the GAAP results we consider most comparable can be found in the earnings presentation. With that, let me turn it over to Vlad.
Thanks for the intro, Chris, and thanks to everyone for joining us today. Last week was the 2-year anniversary of our IPO, and I'm excited to announce an important milestone today. In Q2, we reached GAAP profitability for the first time as a public company. I'm incredibly proud of our team for the resourcefulness and tenacity it took to ship innovative products, serve customers, and manage expenses to reach this level. Let me tell you more about our progress in Q2, starting with our business results. Customer assets under custody grew to $89 billion in Q2, up 13% from Q1, driven by higher equity valuations and continued net deposits. In July, customer assets continued to grow by several billion to over $90 billion. Looking at net deposits, we had over $4 billion in Q2, translating to a 21% annualized growth rate. This brings the total over the past year to over $16 billion, as customers continue to trust Robinhood with billions of their investment dollars. Looking at our financial results, in Q2, we grew total net revenues to $486 million, up 10% from Q1. And By keeping our costs lean, we drove nice operating leverage in our business, with adjusted EBITDA margin increasing to a new high of 31%. These results contributed to GAAP net income of $25 million and EPS of positive 3 cents. I'd also highlight that 2 new products I mentioned last quarter, stock lending and instant withdrawals, continued to accelerate. Each had Q2 revenues that grew another 20% above their Q1 levels. The combined annualized Q2 revenue of these 2 products is over $90 million, which is roughly the size of our equity trading business. This is exciting progress, and I'm incredibly proud of how well our team is executing. Now, let's turn to our 2023 roadmap, which, as you know, we've organized into 3 areas: deepening relationships with our customers, innovating for our active traders, and launching new growth opportunities. Let's first talk about how we're deepening relationships with our more than 23 million existing customers. Our goal is to serve the entirety of our customers' financial needs. We started with trading and investing, and more recently, we launched spending, saving, and retirement products. We track our progress here by looking at net deposits and ARPU. In Q2, net deposits grew at a 21% annualized growth rate, and ARPU increased to $84, the highest level in the past 2 years. We're also making great progress growing assets per customer. Over the past year, AUC per customer increased 37% on average and 88% for Gold customers. One focus has been helping customers save and invest their long-term money. As a reminder, in January, we launched Robinhood Retirement, the first IRA with a 1% match, no employer necessary. And it's great to see that IRA assets are now close to $1 billion. We believe retirement can grow into a much larger part of our business, especially as we add additional products like advisory. Last quarter, I mentioned that we're really happy with the progress we've made with Robinhood Gold and that we're going to be adding even more features and value to the offering. To that end, we are introducing a 3% IRA match for Gold customers, 3 times our standard 1% match. We believe this offer makes Gold incredibly compelling for retirement customers that aren't already Gold subscribers and will also help us grow a retirement business. Gold Cash Sweep, which offers customers up to $2 million in FDIC insurance and among the most competitive yields on cash, is also continuing to grow. Gold Cash Sweep balances grew nearly 40% in Q2 and 130% year-to-date to reach $11 billion. Last week, we increased the interest rate to 4.9%. As we've attracted and engaged more Gold customers, we've seen them deposit more into their Robinhood accounts. And this continues to drive strong ARPU and revenue growth from our Gold customers. With our competitive 4.9% rate on cash and the new 3% IRA match, we're starting to spin this flywheel even faster. Now, let me talk a bit about the X1 acquisition. We view credit as a strategic opportunity to both help customers and diversify our business. Many of our 23 million customers are credit card primary, and we also see an opportunity to go down market and help younger people build credit. Right now, for example, if you're an immigrant or a student, it's hard to get credit, even if you have the salary and earnings potential to support it. This is one of the problems we're excited to solve, and by doing so, we believe we will grow our customer base, diversify our revenues, further deepen our relationship with our customers. After exploring the credit space for several years, with X1, we finally found a team that has the right values and DNA to build and scale a category-defining consumer credit business. X1 provides their 80,000 cardholders with an awesome stainless steel card, attractive customer rewards, and a sleek and user-friendly mobile platform. The team is working hard to ship a great new Robinhood card that we're excited to offer to our 23 million customers, and we'll expand from there. Now let's discuss active traders. As you know, over the past year, we continued to aggressively ship products and features to make Robinhood the best destination for active traders. These include advanced charts, cash accounts, strategy builder, stock screeners, and most recently, Robinhood 24-hour market. With 24-hour market, we are the first U.S. retail brokerage to offer 24/5 trading of single name stocks. We finished the rollout to 100% of our customers in July, and we love the early uptake we see. We've seen strong volumes in our extended hours offering, particularly during earnings season. And Robinhood 24-hour market makes it even easier for customers to trade whenever they want. We're excited to continue to expand the selection of names we offer, and we will be adding 9 more tickets quite soon, bringing our total to 52. As we continue to enhance the experience for active traders, we're seeing our market share of retail trading grow. Last quarter, I mentioned that we were happy with the trajectory that our options trading product was on. We were starting to turn more of our attention to our core equities business. In addition to 24-hour market, we shipped several tools and enhancements for our active equities traders, including longer chart history, returns comparison tools, and our awesome new screeners and scanners. And just a few hours ago, we rolled out instant deposits and cash accounts to all users. Customers love these improvements, and we're seeing that in our market share. In Q2, equity market share was up 15% from a year ago, and our options market share was up over 20% from a year ago. So far in Q3, our market share continues to move higher in both equities and options, and we're working on many more improvements that we can't wait to share with customers. Turning to crypto, we continue to innovate and grow market share while staying mindful of applicable regulations. Our goal is to be the safest, most trusted place for customers to hold, trade, and transact with their crypto. We see our recent launches of Robinhood Wallet and Robinhood Connect resonating with customers, and we look forward to continuing to invest in crypto. The third part of our 2023 roadmap is exploring new growth opportunities to broaden the scope and geographical reach of our products so we can add more customers and increase our revenues over time. We remain focused on our ambitious goal of launching brokerage operations in the UK around the end of the year. As you know, we have an existing license in place, a brand that resonates, and experienced leaders like JB McKenzie running the effort. We've been spending a lot of time with customers and are starting to hire key positions on the ground, including bringing on Jordan Sinclair to lead Robinhood UK. We're getting even more excited to drive innovation in the UK market, like we've done in the US. Another business we recently launched is Sherwood Media, a new media company that is focused on providing the best financial content covering the markets, economics, business, technology, and the culture of money. Our goal is to build on the success of Robinhood Snacks, which is one of the largest financial newsletters in the US with over 10 million weekly readers. We've already started signing multi-year advertising partnerships with NASDAQ, CBOE, and other partners. We're excited about our progress across multiple geographies and business lines. We believe these investments will enable us to serve more customers while also growing and diversifying our revenues. As I reflect on all that Robinhood has accomplished so far in our history, I'm energized by our even larger potential over the next decade. We're really excited about the roadmap ahead of us, and there's so much to do. We see a huge opportunity to innovate for our customers, grow assets, gain market share, and change the industry for the better as we democratize finance for all, our 23 million customers and many more to come. With that, I'll turn the call over to Jason.
Thanks, Vlad. It's good to speak with everyone today. After growing revenue for 5 straight quarters and getting lean on costs, in Q2 we reached GAAP profitability for the first time as a public company. I'm incredibly proud of our team for all of their progress over the past year, transforming the financial profile of our business and positioning us to drive long-term shareholder value. While we're excited about reaching this milestone, we're just getting started on the journey to drive higher levels of GAAP EPS over time. We remain focused on investing for growth to add new revenue streams like securities lending and instant withdrawals, as well as gain market share in our existing businesses. At the same time, we're working to get leaner in ways that don't detract from our growth. For example, in Q2, we made some targeted reductions across a few teams where we saw increased productivity and opportunities for greater efficiency. We're confident that our growth and efficiency efforts can drive great outcomes for customers and shareholders over time. Let's now look at how our business grew in the second quarter as we make progress on our mission. We measure our progress in terms of assets under custody and net funded accounts. Our customers' assets under custody increased 13% sequentially in Q2 to $89 billion, primarily due to higher equity valuations and customers continuing to deposit money into Robinhood. Looking at net deposits, they were $4.1 billion in Q2, which translates to a 21% annualized growth rate relative to Q1 AUC. We believe these resilient customer net deposits position us really well for continued asset growth as markets rise over time. Turning to net funded accounts, which represent unique customers on our platform, they increased to 23.2 million in Q2, up 70,000 from last quarter and 310,000 from a year ago. Additionally, we are excited about the growth we are seeing in our retirement product, which we launched in January. We now have over 325,000 funded retirement accounts, up 75,000 from last quarter. And Gold subscribers increased for the third quarter in a row to over 1.2 million, up about 60,000 sequentially and 150,000 since we launched the Gold Yield high yield offering. Looking at our financial results, we generated positive GAAP net income of $25 million in Q2, and EPS was 3 cents. When we look at our 37-cent increase from a year ago, it's great to see the broad improvement across revenue, OpEx, and SBC that led to the Q2 result. In addition, we have continued to drive profitability higher on an adjusted EBITDA basis. It grew to a new high of $151 million in the quarter, and our adjusted EBITDA margin also reached a new high of 31%. We are excited about the progress we've made on margins, with adjusted EBITDA margin up over 55 points from a year ago. Now let's review Q2 revenues. Total net revenues were $486 million, a 10% increase from Q1, as net interest and other revenues increased during the quarter. Q2 ARPU was $84, up from $77 last quarter and the highest level since 2021. Transaction-based revenues were $193 million in Q2, down 7% sequentially, primarily due to lower crypto volumes and lower options revenue per contract. Moving to net interest revenues, they were $234 million in Q2, up 13% sequentially. The increase was driven by higher interest earning assets, short-term interest rates, and securities lending activity. Q2 interest earning assets were $26 billion, up 16%, or $4 billion sequentially, primarily driven by Gold customers continuing to bring more deposits to Robinhood. Looking ahead, we anticipate Q3 net interest revenues will increase in the zone of $15 million versus Q2. This outlook assumes securities lending revenue in line with Q2, the addition of X1, and today's level of balances, deposit rates, and Fed fund rates. Of course, our Q3 result could be higher or lower depending on how the quarter plays out. Moving on to other revenues, they were $59 million in Q2, up $33 million from Q1, primarily due to seasonally higher proxy revenues. Looking ahead, we anticipate Q3 other revenues will return to the mid-$20 million zone, given typical proxy seasonality. I also want to share some color on what we saw in July. Accounts and assets continued to grow as customers deposited into their accounts and equity valuations increased during the month. July net deposits were roughly in line with the Q2 monthly average. In addition, as Vlad alluded to, we saw trading volumes pick up in equities, options, and crypto compared to our Q2 monthly averages. Finally, margin and cash sweep balances continue to grow from their Q2 levels. We're glad to see our customers continue to engage on the platform and look forward to sharing our full monthly metrics in a couple weeks. Now let's review Q2 expenses, starting with OpEx prior to SBC. It was $357 million in Q2, at the lower end of our prior outlook range. Looking forward to the second half of the year, we're getting more efficient. So even while onboarding X1, we are keeping the midpoint of our full year outlook range unchanged. We're also tightening our range as we're now halfway through the year. Taken together, our updated outlook for 2023 OpEx prior to SBC is a range of $1.43 to $1.47 billion. Turning to SBC, it was $109 million in Q2, right around the lower end of our prior full year outlook range. Looking ahead, given the progress we've made through the first half of the year, we're lowering our SBC outlook again this quarter. Our updated outlook for 2023 SBC is a range of $900 to $940 million, which implies SBC will continue to improve in the second half of the year. Our progress here means that our outlook for 2023 dilution has also improved. We now expect our diluted share count, which was 961 million at the end of 2022, to increase by 3% or less this year. Turning to capital management, our balance sheet is strong with over $6 billion of cash and investments. We use a small portion of that to run our business day to day, so we have billions of excess cash to deploy. In addition, we are now profitable on a GAAP basis, and we generated nearly $400 million of adjusted EBITDA over the past 12 months. So we believe we are well positioned to deploy capital over time to drive growth and shareholder value. One way we deploy capital is M&A that accelerates our long-term product roadmap. In Q2, we acquired X1, which we see as a capital-efficient way to bring a great new capability to our customers. The X1 platform provides their roughly 80,000 cardholders a no-fee stainless steel credit card with attractive rewards on each purchase, and we're incredibly excited to begin offering credit to Robinhood's 23 million customers. Looking ahead, we continue to look for M&A opportunities like this that can complement our organic product development efforts and are a good strategic, financial, and cultural fit with Robinhood. Another way we plan to deploy capital over time is through share repurchases. As you know, we've been working for the past 6 months to purchase the 55 million Robinhood shares that Emergent Fidelity bought last summer. We continue to have discussions, and we'll update you when we have more to share. In closing, I'm really pleased with the financial progress we've made over the past year while continuing to deliver new capabilities and enhancing customer experience. Q2 was our first quarter of GAAP profitability as a public company and 5th consecutive quarter of revenue and adjusted EBITDA growth. And we're not done. We continue to focus on driving profitable growth over time. With that, Chris, let's go ahead and move to Q&A.
Thank you, Jason. For the Q&A session, we'll start by answering shareholder questions from Say Technologies. These are ranked by the number of votes. We'll pass over any questions that we already addressed on this call or in prior quarters. We'll also group together questions that share a common theme. After that, we'll turn to live questions from our analysts.
Apologize for the clipping. The audio is coming from Robinhood. They are broadcasting
asks, what is the reason
at a too high rate.
Selling stock?
Yeah, thanks for the question. We want to have management align their interests with our shareholders, and we think our compensation structure does that. So most of our management team's compensation is in the form of stock, and because of this, it's normal for our management team to sell a small portion of their holdings as income. So management sets up automatic selling plans. They're called 10b5-1s, well in advance of the trades that you might see come through. These are automatic, and they sell small portions of their stock over time. As you look across our management team, you'll also see that we continue to be large holders in Robinhood stock, and certainly we're highly motivated to create shareholder value.
Thanks, Jason. The next question comes from Lance G., who asks, can you provide an update on the 24-hour trading and how it's going? Vlad, do you want to take that one?
Sure. We were super excited to launch 24-hour market. We were the first U.S. broker to offer 24-hour trading of single-name stocks, and we rolled it out to 100% of our customers in July, just a few weeks ago, and we'll be adding 9 new tickers soon to trade 24/5. Plus, especially for those of you that are in the New York City area, you may have seen us doing some marketing around it. We're hearing great feedback from our customers, particularly those that trade more actively, and we're continuing to invest to make the offering even better.
Great. Thank you, Vlad. The next question is from Atanu M., who asks, do you have a plan for share buybacks to regain investor confidence? Robinhood has been way under IPO valuation for more than a year now. What is your plan to rebuild investor confidence? Jason, do you want to take that one?
Buybacks coming.
Thanks for the question and also the feedback. There's a number of ways that we're working on delivering value for shareholders over time. First, we're investing organically in our business, and you hear us talk about the new products that we've recently delivered as well as ones that are on the roadmap, and we're super excited about that. Second, we've got a super strong balance sheet, and we're using it for M&A as a way for us to move faster. You saw that this quarter with our acquisition of X1. I also think there's more opportunities like this, and we're looking out for them. And as you mentioned, share repurchases is another lever. And as you know, we continue to work on purchasing the 55 million shares that were acquired by Emergent Fidelity. And over time, we'll consider other ways to return capital to our shareholders. In terms of our more recent financial progress, we've hit some pretty big milestones for the business. Our revenues in Q2 were up over 50% from last year. Our costs are down hundreds of millions, and this led to us generating nearly $400 million of adjusted EBITDA in the last 12 months. We've also reached a new high of 31% adjusted EBITDA margin this quarter, so really happy about that. And of course, really proud that we reached GAAP profitability for the first time as a public company with 3 cents per share. So all in, I think we're in a great position, and we've got really good momentum to deliver even better results for customers over time and shareholders.
Thanks, Jason. The next couple questions I think maybe Vlad and Jason can share. So Anuj B asks, can you talk about the acquisition of credit card provider X1? How does this strategically help Robinhood with future plans? Was X1 a profitable company at the time of the purchase agreement? And will this bring more users and gold users to Robinhood? And then Omer D asks, how will X1 be integrated into Robinhood exactly? Vlad, do you want to start?
Yeah, I'd be happy to start. We're really excited to work with X1 and the team over there to build a category-defining consumer credit business. We think the opportunity is incredibly strategic for Robinhood and incredibly useful for our customers. One of the goals for Robinhood, as I mentioned earlier in the call, is we want to help customers not just trade and invest, but perform a wide variety of their financial needs. And we want to be their financial home and provide easy-to-use, accessible interfaces and high-value products. Credit is a space that's incredibly important to many of our customers. It's something that we've been exploring for many years, and it directly addresses a lot of feedback that we've been getting from customers. A lot of our customers want a Robinhood credit card from us, and it aligns well in our mission. We believe that we can actually do something really good here and provide credit to people who haven't always had easy access, young people, students, and immigrants. And one of the things we really, really liked about joining with X1 is, like Robinhood, they think of this as a technology problem, and they leverage technology to build a simple and seamless user experience. So I think it's going to be great for customers, great for shareholders as we scale the product. And I'll defer to Jason for some of the financial details.
Yeah, thanks, Vlad. At the time of the purchase, X1 had about 80,000 cardholders. We haven't provided other details on their finances prior to the acquisition, because really we think the big picture here is that this deal is really about the opportunity to scale credit with our 23 million customers and less so about X1's finances prior to the deal. Qualitatively, I'd say that their business was growing leading into the acquisition. We really like the quality of their credit and underwriting. So we're in a good spot, and their overall economics were also improving as well. In terms of integration, right now we are integrating the team, and we're working closely together on strategy. And Deepak is reporting directly into Vlad. So super excited about the potential here, and we'll share more updates as we make progress.
I'll also just say that I was at dinner with Deepak last night, and he pulled out a prototype for the new Robinhood credit card, and it's beautiful, and I'm very excited to share it with our customers.
Awesome. I look forward to getting one too. All right. So the next question is from Gustavo G, who asks, when will bonds, CDs, et cetera, be introduced to Robinhood? Vlad, do you want to take that one?
Yeah, thanks for the feedback. We're always listening to customers, and we want to make sure that we offer an expanding selection of products and services over time. I would like for you and for all Robinhood customers to be able to use us for all of your needs and not have to turn to other providers for investments. Today, we have some similar products, for example, bond ETFs and Robinhood Gold that offers 4.9% on uninvested cash with up to $2 million in FDIC insurance. But we know that there's more things that we have to add, and we're not going to stop. So over time, you'll see us continuing to listen to customers and adding even more investment options.
Great. Thanks, Vlad. And then the next one's also for you. Victor S. asks, when will AI capabilities begin appearing in the application?
Thanks for your question. AI is really important. It's a strategic shift in how Robinhood and many companies will have to think about operating their business, and something I think about a lot. Over time, to be competitive, we think every company will need to become an AI company. And I think given our track record of innovation and the technologies that make up the Robinhood offering, we think we're naturally positioned to become the leader in financial services for AI. We're excited to explore further how the technology can improve all aspects of the Robinhood experience for our customers and create efficiencies in how we offer our products and run our business. We're actively engaged also in recruiting high-quality talent to lead these efforts at Robinhood.
All right. Thank you, Vlad. The next question is from Richard B., who asks, is it too early to think that Robinhood is strong enough to do dividends? Jason, do you want to take that one?
Sure. I think we're in a really strong place as a company. We've got over $6 billion in cash and investments on our balance sheet. This is the 5th consecutive quarter of revenue and adjusted EBITDA growth. We've got record margins this quarter, and we just reached GAAP profitability. So I'm really liking the strength of the business and the position that we're in right now. In terms of returning value to shareholders, the traditional debate is share repurchases versus dividends. Personally, I'm more inclined to use share repurchases. And on that front, as we mentioned, we're working on purchasing the 55 million Emergent Fidelity shares, and we'll share more on that as we make some progress.
All right. Thanks, Jason. I think we have time for one more Say question, so I'm going to put together two.
Okay.
So Thomas P. asks, how has the growth in retirement accounts been? Have you been seeing many people transferring accounts over to Robinhood for the 1% match? And Michael A. asks, does Robinhood ever plan to offer employer-sponsored retirement accounts, such as 401ks? Vlad, do you want to take that one?
Yeah, I'd be happy to field that. I'm glad to hear of the continuing interest in our retirement offerings. We're very proud of our retirement offering. It gives our customers another tool that they can use to control their finances and build wealth over time. Customers love the 1% match, and today we announced the 3% match for our Gold customers. The progress so far has been great. We're approaching $1 billion in AUM, and we have seen a big pickup in transfers from other institutions for the 1% match. Regarding the second question about employer-sponsored accounts, we think it's a space that is begging to be disrupted, frankly. We don't have this on the near-term roadmap, but definitely wouldn't rule it out. That said, there are also tons of individuals who don't receive a match from their employer today. So if you're an employee without a match, come to Robinhood, and we will match for you.
All right. Thank you, Vlad. And that concludes our shareholder questions from Say Technologies. We appreciate our shareholders taking time to ask these questions of Vlad and Jason, and we look forward to more next quarter. Now I'll turn the call over to Gigi to lead Q&A from our analysts.
Thank you. As a reminder, to ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. Please stand by while we compile the Q&A roster. Our first question comes from the line of Devin Ryan from JMP Securities.
Hey, thanks. Good afternoon, Vlad and Jason. How are you?
How's it going?
It's going great. I guess first question on expenses. The headcount reduction that you noted, I think the press reported 7% in June. I'm assuming the one-time costs associated with that are in the guide. And then I guess I'm curious if there's any future cost savings that could come with that. It's not as material as some of your others, but I would assume there's still probably something related to that. Thanks.
Yeah, Devin, we did have some one-time costs on that reduction. It's included in the OPEX that we reported for Q2. And we viewed these changes as more of kind of ongoing management of costs, and so we did not exclude them from the calculation of adjusted EBITDA this quarter. And then in terms of kind of go forward, the effects of the forward cost savings on the reductions, as well as the additional costs of integrating X1 are all factored into the OpEx guide that we gave, and we tightened the range there and left the midpoint unchanged for the rest of the year.
Got it. Okay, that's fine. And then in terms of just some of the improvements you're seeing in investor engagement, obviously you mentioned some of the transaction activity recently, and we're seeing margin balances stabilize and improve. Still good deposit trends. It sounds like all that's continuing into July. Just love to get a little sense of whether this is really kind of in the active trader cohort, or if you're seeing some of these improvements across the customer base more broadly. And then just at a higher level, kind of what you're hearing from different customer cohorts around their interest in trading. We've obviously been in a pretty tough and exhausting, I think, market for the past 18 months. Just where sentiment is today, and it sounds like some early signs of maybe recovery. So love to talk about that. Thank you.
Yeah, so I'll maybe lead, and then Vlad, you can weigh in a little bit as well. So, overall, the sentiment from our customers about Robinhood is improving. We talked about improvements in NPS year over year last quarter, overall up 20 points year over year on average, and up over 30 points for our more active traders, which is really encouraging. And we're continuing just to focus in on user experience and doing things like adding stock screeners and scanners, as well as Robinhood's 24-hour market. So I think our investors are noticing. Vlad mentioned an increase in market share year over year, both in equities up 15% and options up over 20%. And as I look at kind of deposits, customers continue to deposit their funds with Robinhood, over $4 billion in the quarter, and we continue to see strong deposits in July. And trading kind of picked up throughout the quarter. April, I think, was seasonally low, and then we just accelerated as the quarter progressed, and July was also good, as we commented in our more formal comments. So, overall, I would say that the work that we've been doing, improving user experience and product selection, is really showing through for our customers.
Yeah, I don't really have much to add. We've been really pleased by our progress. Jason mentioned and reiterated the market share gains, and I think the NPS improvements, particularly for active traders, have been really good. It's been really good to see that translating to market share gains across all of the assets that our customers trade.
All right, I'll leave it there. Thank you, guys.
Thanks, Evan.
Thank you.
Thank you. One moment for our next question. Our next question comes from the line of Dan Dolev from Mizuho.
Hey, guys. Great results. Thanks.
How's it going?
Hey, Vlad, how are you? Sorry, I had some issues with the phone, and I kept getting rebooted. So I really appreciate it. Great results, by the way. And I don't know if this was addressed, but we did some work that showed that you were gaining share from your competitor in crypto. So apologies if this was addressed. But is there anything you can call out on why you're gaining share? What is driving the share gains at Robinhood and crypto from your biggest competitor? And then I have a quick follow-up.
Yeah, I'll go ahead and take that. It's a little harder in crypto to measure market share. It's not as easy as it is with equities and options, but by our analysis, it does look like we're gaining share in the coins that we offer. In terms of why, I'd probably point to the value proposition. We think we're the best place for retail traders to buy crypto for the coins that we offer. And also, we think we've got just a great user experience. And so those are the two things.
Yeah, and I'd also add that we've offered customers great value in addition to a great customer experience. Like at Robinhood, you get more crypto for your dollar than at most of our competitors. And I think we've started to do a better job communicating that in the user interface. So, we're making it, incredibly clear we're trying to make it more and more clear to customers just how good of a value they're getting. And of course, I'd add that it's very important for us to be the most trusted and safest company in crypto. And I think, with all the turmoil in the space over the past year or so, I think there has been a little bit of a flight to safety, and we're seeing that reflected in some of the market share gains you're seeing, and that's something that we'd like to continue to invest in.
Yeah, it's pretty amazing. Great stuff. And then a quick follow-up. I mean, great, progress on the retirement stuff. I mean, we're very excited about this here at Mizuho. Do you think that, is it a fair statement to say that over time, as this grows, this is going to show up in obviously bigger impacts on MAUs and it'll, the MAUs, it'll kind of cause a positive inflection in the MAUs because of the retirement account, the retirement offering? Thank you.
Yeah, I'd be happy to field that. So MAUs did increase from May to June. Of course, when you think about all the things we've been focused on as a company and on the product side over the past year, they haven't naturally flown into MAUs because, even retirement itself, it's sort of a passive long-term investing product and not typically a product that you associate with sort of active trading or engagement. Although there's advantages for all types of investors with retirement products. Active trader investments, active traders are kind of a relatively small subset of the overall user base. So they drive a disproportionate amount of revenue, and making them really, really happy, you're probably not going to see that as reflected in the MAU metric. So we've made a lot of progress over the past year, and I think that's been progress that's sort of on another axis than MAUs and trader engagement. That said, we are working on a bunch of things that we think will bring more customers and more transactors into Robinhood, and we do expect over the long run the MAU metric to follow. There's a lot of investments in place that we think will pay off for us there.
One of the things, Dan, that I'm really excited about is our continuing investment in Gold. That really deepens the relationships with our customers. We offer them 4.9% on their cash sweep balances, and as we announced today, a 3% retirement match. And so I think, as we deepen our relationships with our customers, as we expand our product selection, you're going to naturally see engagement tick up over time.
Yep, I would agree. Great results. Congrats again. Thank you.
Thanks so much.
Thank you. One moment for our next question. Our next question comes from the line of Steven Chubak from Wolfe Research.
Hi, good afternoon.
Good afternoon.
Wanted to start with a question on expense. You guys have done a nice job delivering efficiency gains while executing on the product roadmap. That said, your expense per employee is still relatively elevated when we benchmark versus fintech as well as retail brokerage peers. And wanted to get a sense as to where you see this metric trajecting as the business scales and as you expand your geographic footprint.
Yeah, thanks for the question. I'll take that one. I would generally agree with you. We've been focused on reducing our costs, and rationalizing the headcount, and our intention is to be lean and scrappy in the way that we grow our business and drive leverage to our business over time. And so we've been focused on our cost per employee, as you pointed out. One of the changes that we made earlier this year is we moved from a stock-based award program that grants 4-year awards to a program that grants awards that vest over 1 year. And we think that that's a prudent way to do it. Another thing, as we look at our employee footprint, we're very heavily concentrated in higher cost areas in the U.S., and that represents an opportunity for us to balance out the mix of geographies that we work in as Robinhood employees. So it's something that we're working on, and I see that as an opportunity.
No, really helpful color. And, speaking of operating leverage, did want to ask on the profitability outlook. Looking ahead, just now that you've reached GAAP profitability, remind us how you're thinking about normalized GAAP margins for the business at scale. And now that you've hit this milestone, was hoping you can give us an update on what the next milestone is that you're aspiring to.
Yeah, thanks for the question. Look, long term, what I'd tell you is that, our objective is to maximize, GAAP EPS and free cash flow per share. We're not giving any specific near-term milestone targets there, but, when I look at the cost structure of our business, it heavily skews towards fixed costs and less so towards variable costs, which if you can manage those fixed costs really effectively as you grow your top line, you can deliver a lot of leverage to the bottom line. And so as I think about what kind of margins are possible for this business, I don't see any reason why we can't deliver the kinds of margins that you see at other financial services companies.
Very helpful. Thanks for taking my questions.
Yeah, you're welcome. Thanks for the questions.
Thank you.
Thank you. One moment for our next question. Our next question comes from the line of Michael Cyprys from Morgan Stanley.
Hey, Mike.
Hey, Vlad, Jason. Thanks for taking the question. Maybe just starting with the active trader opportunity set. I was hoping you might be able to update us on the opportunity set with futures. I know you guys have some plans to launch that this year, I believe. Maybe you can update us on the progress there and the build out. And then similarly on cash settled index options, where is that on the priority list, and what sort of investment is required on your platform to enable that, or could you just flip a switch and enable that today?
Yeah, futures is something that we're very excited about. We have been spending a lot of time thinking through how to make a really, really great customer experience, particularly on mobile, because as we look at the other offerings in the market, we think that there's a gap that we can fill with user experience, particularly on mobile. So we're spending a lot of time thinking through that, talking to customers, and we're putting together a really, really nice offering. Right now, we're estimating that it'll land in the first half of 2024. And the team is hard at work just making the product as great as possible for our customers. I think on the cash settled options front, we're also hearing that from customers that that's an attractive product and will enable them to manage their risk. That's also slated to land in the first half of 2024.
Great. Thanks for that. And just a follow-up question on the X1 acquisition. I was hoping you could talk about your go-to-market strategy for how you're thinking about bringing the card offering to your existing customer set and broadening it out over time. Where do you think there's room in the marketplace for differentiation? And then can you talk about the underwriting process and the criteria there, just given some of the potential customers may not have much income or credit history? How do you get comfortable and manage the credit risk that this introduces?
Yeah, I think that's a great question. In terms of go-to-market, we kind of see two near-term opportunities that are interesting. One is just making a great card available to sort of the typical Robinhood customer. Robinhood customers, a lot of them are credit card primary, and we've been hearing lots of feedback from them on what types of offerings they would like. And we think that we can make something that's really, really compelling for them. We also see an opportunity, and I mentioned this a little bit earlier, for people who are younger, maybe college students, people with limited credit history but reasonable earning potential, like immigrants, who have a hard time getting credit right now. And we think with technology and the underwriting capabilities that X1 has offered, and has kind of been improving over time, we can build something really, really good for them as well. Of course, credit is an incredibly important market, large space. As a business, there's a lot of margin to be had there. So we're not just going to stop there. We want to build a suite of comprehensive credit solutions across multiple products for our customers. So this is just the beginning. But we think even within credit cards, there's a massive opportunity for us.
Yeah, one of the things that we were really excited about for the X1 team is just the quality of their team around underwriting. And we're really impressed with the high quality nature of their loan book. It's prime plus. So really, really happy with that. And, in terms of their underwriting, they look at things like income and credit bureau and the normal things that you'd expect the teams to be looking at.
Great. Thank you. And congrats on the profitability milestone this quarter.
Thank you.
Thank you.
Thank you. One moment for our next question. Our next question comes from the line of Ken Worthington from J.P. Morgan.
Hi, good afternoon, and thanks for taking the question. I wanted to follow up on the monthly users question earlier, so a couple of points here. Maybe first, you have 23 million accounts and MAUs of about 11. So first, funded accounts were at their highs in 2Q, and market conditions have been improving in what I guess I'd call the more innovative part of the stock market this year. But MAUs were at their lows in 2Q. So I guess maybe first, does this relationship between MAUs and funded accounts seem sort of reasonable to you over time? And then maybe second, as we look at this, call it 10 million account gap between the two, what portion of these inactive accounts are ones that you think you can get to re-engage in normal market conditions, or if market conditions stay normal sort of over time?
Hey, Ken, thanks for the questions. One of the things that is a weakness of MAUs is it's measuring engagement just for those that engaged in the month. And for more active traders, I think that there's a fairly high correlation there. But for the broader set of customers, less so. And we provided a couple quarters ago some context that MAUs for all of Q4 was 16 million, and for the past 6 months was over 20 million. And so it's not that they're dormant customer accounts, it's that they're just not necessarily engaging every single month. And that's actually, for a lot of people, is actually a very normal and healthy amount of engagement. I do think over time, as we broaden our product selection and deepen relationships with customers, that you're going to see a more consistent relationship between MAUs and total funded accounts. But in the shorter term right now, we have seen those kind of move in opposite directions.
Okay,
I'd also add that there's sort of an asset dependency here, like the brokerage side with equities and particularly growth stocks. Like that market has been doing rather well in Q2, but crypto has kind of continued to soften. So you sort of see multiple conflicting things, and that can be reflected in the MAU numbers because a significant percentage of our customer base is customers that trade crypto as well.
MAUs moved up a little bit in June versus May, and it moved up a little bit more in July. So it appears to be stabilizing and kind of moving back up a little bit.
Great, thank you. And just 2 simple numbers questions. So thanks for the retirement and the gold account numbers. Any chance that you would give us fully paid SEC lending accounts and clients that have opted to use the cash card?
So fully paid is 1.5 million. Cash card, offhand, it's a couple 100,000, I think, that are funded, and about 1 million that have signed up. And I think the X1 acquisition really doubles down on the spending strategy. We want Robinhood to be a place to handle all of our customers' critical financial needs, and we want them to be able to spend with debit cards or credit cards, really at their choice. And so X1 and the cash card, I think, are a nice complement to each other.
Got it. Great. Thank you very much.
Thanks, Ken.
Thank you. One moment for our next question. Our next question comes from the line of Ben Badush from Barclays.
Hey there. Good evening, and thanks for taking the question. I wanted to follow up on actually Mike's question from earlier on X1. And Jason, you mentioned in the prepared remarks that I think there's some some interest income expected to come, and that's related to X1. Can you maybe talk about the revenue profile you're expecting for Robinhood between interest income and interchange revenues, and how much credit exposure does Robinhood sort of take on with the acquisition?
Yeah. So thanks for the question. So the comments I made in the prepared remarks is that we expect interest income kind of all in, including X1, to increase sequentially in the zone of about $15 million. So X1 was a part of that. When I think about the geography for revenues for X1, you've got the interest income that you earn on revolving credit. That's offset by the cost of funding and presented net for interest income. You'll have some interchange revenue, but our accounting conclusion on that looks to be that it'll be netted with the rewards cost. So that'll be in transaction-based revenue, but presented net. So that's kind of the accounting overlay for X1. In terms of the possibility, I mean, X1 has 80,000 cardholders at the time of the acquisition. We have 23 million customers that have a very nice credit profile, and I think over time we can make some strategy decisions that'll make credit really broadly available to our customer set, regardless of their background. So I think there's a big opportunity, and I'm excited to see the team work against that.
Yeah, I would just add that one of the reasons we got excited about acquiring this company and this team versus pursuing kind of the traditional partnership credit card model is that if you think about X1, we do have access to both transaction-based interchange revenue and also the kind of more recurrent, sticky lending revenue. And this gives us an opportunity to build a diversified business and offer differentiated value to customers because we have access to a much greater percentage of the overall profit pool than we would under kind of your typical co-brand partnership model, which tends to be more one-time bounty-based coupled with interchange revenue share.
Got it. This is very helpful. Thank you.
Thank you. One moment for our next question. Our next question comes from the line of Craig Siegenthaler from Bank of America.
Good afternoon, everyone. Thanks for taking my question.
Hello.
Hey, guys, can you hear me okay?
Yeah, we can.
Oh, perfect. Good. So thanks for taking my question. My question is on the UK brokerage launch. So I'm curious, how are you going to monetize this effort as the PFOB rules are different in the UK than in the US with payment for order flow ban?
Yeah, thanks for the question. We're mindful of the regulatory environment and all the geographies that we operate in. What I'd say is there's a number of revenue streams that are available for us. The team's still working out the details there, but certainly SEC lending and interest income. So there's a number of ways, and we do in the U.S. have a gold offering. So I think there's a good potential for this to be an attractive business on a unit economic perspective, with or without payment for order flow.
And a big focus for us has been, since we are a technology company, expanding internationally in a capital efficient manner without sort of excessive investments in headcount.
Great, guys. And just my follow-up, I know you don't report it exactly this, but I was curious also on the high-level trends in both cash equities and equity options on the revenue per trade trend in the second quarter of 23 versus the same period last year.
On options, we are seeing kind of across the industry that the take rate on options trading has been coming down. This is really reflective of the overall lower volatility in the market, and also a shift that's been seen kind of industry-wide on a greater share towards ETF options. And so for the quarter in Q2, the take rate was 45 cents. That was the average for the quarter. It did come down as we progressed through the quarter, and has bounced back up in July slightly versus June to about 42 cents per contract. So that's what we've been seeing there, and we've been keeping an eye on it.
Thank you, Jason.
Yep, thank you.
Thank you. At this time, I would now like to turn the conference back over to Vlad Tenev for closing remarks.
Thank you, everyone, for joining us today, and we're very excited to continue innovating, delivering for customers. Thank you again for all the questions.
Thanks, everyone.
This concludes today's conference call. Thank you for participating. You may now disconnect.
Wonderful stuff. Thank you very much indeed. That is the end of our earnings call, and I'm very, very pleased of the things that I learned and heard tonight. So we did have a sell-off. I was going to answer that very quickly. We will come to the end of our broadcast now because we want to edit this video and put it out as its own content in a few minutes' time. Why did it sell off? Well, it's perfectly normal because the market was up and we've had a rally all the way up to earnings, and those that have bought the stock a long time ago and those who had special prices when this, the private investment was done, they are up hundreds of percent. Some people are. I was up 48% on my position. I'm very, very happy. And they dropped it to buy it back. It makes perfect sense to me. What I did, however, because I'm still trying to build up a position, I held. I took some profit off the S&P because I think that's going to start cooling off now. I think we've had a massive rally this year. I've made 17-18% on the S&P this year. I've started to trim back. I bought some more Robinhood tonight. I'm up on it. On what I bought tonight. I bought at the very, very bottom of the dip, but I think over the next coming weeks we'll see it rally. Profits are up. Someone mentioned about losing some subscribers or users or inactive users, and someone mentioned, I think it was T.O. Roll mentioned about quality users. I agree with that 100%. If there are, remember where Robinhood got a lot of its customers from during COVID. A lot of very young investors, that many of those have had capitulation now, are out of the market and they're not doing anything with their positions. There are a lot more quality users, bigger users who use their Robinhood accounts regularly. People like myself who are using their accounts all the time. So less users but better users, for me, is a win-win anyway. But as more and more people start to hear about the services of Robinhood, just keeps beating everybody. I mean, the amount of innovation and the level of service. I mean, I love Robinhood. Obviously, I use it. I'm not only am I an investor, but I use it every day. It's a win-win for me. Hearing tonight about the credit card. Now, the credit card, as I understand, they didn't mention it on the call. The credit card will allow me to pay my bills directly from my Robinhood account. I don't even need a bank account when that happens, because right now I pay all my bills on a credit card because I earn 3% cash back, okay? I pay all my bills on a Bank of America credit card. That's the only reason I ever put money back into the bank, to pay off my credit card, right? I would much rather use my credit card directly from Robinhood because they will offer me, I'm sure, a better deal, because they do better deals than the banks everywhere else. I'm sure they'll give me a great return on my credit card user rewards. Maybe it's free stocks or free shares or cash back or whatever. But I can't wait for that. And we all know that's a big money spinner, because for those of you who don't pay their credit cards off every month, there'll be an interest profit there for Robinhood. Love the fact, I can't wait, Leah's in the background, she can hear me saying this now, love when they announced the 1% to 2% to 3% match on a Roth IRA. That makes me like an employed person. My wife, has a job like everybody else, and that's now up there with being employed by a company. A 3% match, fantastic. I worked it out for you. I think it was 7.21, $235 a year, free money. So what I will do at the end of the year, I will take out $7,500 from my brokerage account, transfer it back into my main account, free, instantly, does that straight away. If it's 7,500, it may go up to 8,000, but 7,500, then I'll bring that money back and earn 3% instant match on my money, which allows me to buy stocks and shares on my Roth IRA. I can trade for free, tax free, make profits. I can start getting my Roth IRA a lot bigger than my main brokerage account with a 3% match. Absolutely fan-flipping-tastic. Because don't forget, in a year from now, the rates are going to start coming down. That 4.9% is going to come down. So if you can get a 3% match, that then balances out what you're going to get anyway from an interest payment. So having that for free, and it's instant, I'll tell you as well. When I put money in my Roth IRA, I put $7,000 in. They gave me $70 instantly. Well, they're now going to give you $210 if it was $70. If it was $7,000, $7,500 this year, might be $8,000 next year. I don't know, but that's great. I'm very, very happy. Anyway, good night tonight. To me, this is an opportunity to buy more. I look forward to seeing it go lower to buy more, actually. The buybacks as well is good for the stock. So win-win tonight, as far as I'm concerned. Very, very happy with that. Thank you everyone for joining me. Thanks to all of you who did tap the subscribe button. Let me show you what it does, and the like button, what it does. This is where we are live right now. There are 79 watching right now. If you tap the like button, you'll see my likes will go up. What that does is if you like my content, you'll be shown more of this. We've got the Amazon earnings tomorrow. We're live 10 hours a day. We got the breaking news. We got the opening bell tomorrow morning, closing bell tomorrow night, and we've got Amazon earnings tomorrow night. Love Amazon earnings. Always presents opportunity to make some money. If you tap the like button now, that will go up and you'll be shown more of my content. If you don't like my content, please do something. Tap the down like button. If you tap the down like button, then you won't be shown my content anymore, which is good because you won't get my stuff if you don't want it. And also, we get more of an engaged audience. Thank you very much for the guys doing that now. I really do appreciate it. That's why the like is so important. And the other thing as well, as you may notice, we are just a few away now from a very, very magical moment on our channel. We aim to be the most honest, real, live YouTube channel in the world. We're at 9,927. If you tap the subscribe button, when we hit 10,000, we can do more fundraising. I do fundraising concerts all the time, but then we'll be able to do it without credit card fees from Robinhood, from YouTube. So please do consider subscribing to our channel to get us to 10,000 as soon as possible. Very, very excited about that. We're just days away. We're actually, I've been scheduling it to be there in 10 days time. As you can see, 10 days, 14 hours, 53 minutes and 17 seconds from now. Anyway, thank you ever so much, everyone who joined us tonight. I'm going to end the show now. This video will be edited down as its own video in a moment. I'll upload it. And then if you want to watch it back without all the bit before and after, you can. Bernard Foxton says, as Simon Cowell might say, it's a yes from me. It's a yes from me. It's a yes from me, 100%. They lost 1 million clients by what CNB said, and have 10 million clients left. Michael Anthony, that's not correct information. We've just heard the numbers, so that's not correct. Anyway, I think so, Bernard. I'll transfer my 212 account. Yeah, I mean, the Robinhood Roth IRA is outstanding. Very, very excited about that. Cannot wait. And you can also, if you've already got your money in a Roth or a 401k and you've already had a match, you can transfer it to Robinhood and get another match. That's how good that is. So my wife's thinking, oh, he's going to badger me again about that. Yeah, I'm going to badger her again about that. Anyway, I've got to go. Thank you ever so much for joining me. Thanks for being with me tonight. Thanks for all of you that joined in, took part. I'll see you back in the morning for the opening bell. And that's it from me. Let me just play out the music. Thanks to all of you. Let me just close it down. Bring up the end screen. Let's see if we've got any credits to show tonight. I don't know if we had any super chats during the show, any stars of our show. Let's have a look. Did we have any stars tonight? Roll the credits. Subscribers, Terrafy, 5, Quinn Rong Lio, Johnny T, Ketan Patel, and a new member, Stephen K, became a silver member tonight. Thank you very much indeed for Stephen K. Just reading some more comments. 10,000 by August the 10th. Good night. Yeah, it will be there, I'm sure, when we fly, of course, with Virgin Galactic. See, Michael Anthony says, remember, I just have to make sure we always know Michael Anthony is not a member of our channel. Could be a scammer, could be a bot, could be 10 years of age. Remember, that's why we have membership, so we know who everybody is. Michael Anthony is saying CNBC info came in from CNBC with Carol is the one that said this. Well, we just heard the earnings call. We know what the figures are, so that doesn't make any sense anyway. Thanks for the great info and coverage, Martin. Sensei Crypto, thank you very much indeed. If you did enjoy tonight and you'd like to hear more from Sensei Crypto with regard to our crypto challenge and full technical analysis, you can. This is Sensei's website. I'm going to give you a quick look here. Go and check it out. There's free content, plus there is information where he can do one-on-one charts for you should you wish to go and become a member of his services. Remember, if you're a member of mine, you get my membership virtually for free by using the code LucasAdes, LucasAdes. Will get you a lifetime discount to Sensei services. Go and check it out. Go and have a look at his website. I use it. I use the crypto services with him. Absolutely fantastic. I'm up 50% on my crypto challenge. Good luck to all of you that do use that. But that's it from me. I am done. Thanks to all our new members. See you back in the morning for the opening bell. Look out for the edited earnings very shortly. We apologize for the audio. That was not me. That was Robinhood was sending too high. It was clipping on their gain. Anyway, from me, all the team. Where's that come from? Just me. Until next time, take care of yourselves. Take care of money. I used to have a big company, right? Take care of yourselves and each other. Bye-bye for now.